Um, Anyone that doesn't join this morning would have to watch back the will have to watch the playback on YouTube. So yeah, good morning again, guys. How many of you were able to have a look at their chart? Find some support and resistance, maybe play some trade. Please let me see. Um, Talk to me via the chat section. Let me see. Was there anyone that was able to take any trades at all last week between Wednesday and Friday? Anybody? Anybody able to take a gold trade? Okay, you haven't been able to watch the playback yet. Okay, that's fine. Do that after this lesson. Okay, amazing stuff. The market is closed now. So what we can do is we can analyze the market together. We can analyze the gold market together. And yeah, just another, just to throw it out there. Gold, another commodity that moves similar to gold, almost identical, is silver. Okay, gold and silver moves almost the same way. Like if you look at their chart, they will look almost the same thing because, but silver is more volatile than gold because it's a more industrial commodity. Okay, there is silver in almost everything around you. There is a quantity of silver in the clothes that you wear, from your cutleries to your furnitures to everything around you has a trace of silver in it. Okay, even your light bulb has a trace of silver in it. So silver became a very, very high demand commodity industrially a few years ago. Robert Kiyosaki, the author of Rich Dad Poor Dad, he forecasted this many years ago, telling people to invest in silver because silver is going to become one of the most sought after raw material for industrial production in the manufacturing industry. Yeah, it was a very influential voice in that some people listened, some people didn't, but what he predicted, did it happen? Yes, it did. It happened. Wilford, unfortunately not getting ready for next week. Okay, that's fine. That's all right. We've got time. We've got time to do it. Mohammed has watched most of last week's, most of Wednesday's lecture. I believe that's what you want to say. That's fine. Up to support and resistance. Okay, we're going to look at it again today anyway, so you're fine. All right, so yeah, like I said, gold and silver does almost the same thing. So you want to add silver to your portfolio, okay? And you can create like a watch list. Okay, you can create like your own portfolio and put everything you want to be trading actively in it. Okay, you can see a watch list has been created by default. It's called popular markets. Okay, and popular markets simply means the most popular markets that people trade. So they just put them some commodities, some forex, some crypto, some or you can create yours. You can use the popular market if you like, but it's just that on the popular market, silver is not there, only gold is there. So you can create your own watch list and add whatever you want to trade on there, and then you can trade them. Okay. So where should we start this morning? Okay. Let me see. Let me see. Does everyone understand the candlestick patterns? Do we need to go over it again at all? I believe we've covered it properly in the lectures that we've had. I think what we just need to do more is the more we look at okay, you already got the candlesticks. The more what we do is when we look at the charts, I will show you certain things. I will tell you, oh, look, can you see this is triple candlestick pattern? This is double tweezer. This is inverted hammer. This is morning star. This is evening star. I will show you all of those things on the chart as I see them. But to be honest, like I said to you, you wouldn't actually look at charts and be looking for morning stars. No, you're looking for a trend. You're looking for a channel. You're looking for a range. You're looking for the support. You're looking for the resistance. Either is an horizontal plane, or is a rising trend, or is a falling trend. You're just looking for support and resistance. You want to sell at the resistance. You want to buy the support. Angela has gotten up to shooting star and inverted hammer in the last lesson. Amazing stuff. So Yeah, so you're always looking for support and resistance. And like I said, the more skillful you become at spotting support and resistance, the better a trader you will be, because you know when to enter a trade and you know when to exit a trade. Okay, so yeah, so to be honest, what you're always looking for is support and resistance. When price hits a support or when price hits a resistance, then you kind of then want to begin to look at the shapes that the candles are forming at that point to either tell you if it's likely that the line will be broken and price will continue in its direction that it's going, or if a reversal would happen. Most often than not, if the support or the resistance is a very strong support and resistance, most often than not, price will reverse. Sometimes price may reverse a little bit and retest the line again. And price can retest the line multiple times. If the line keeps holding, then price probably will just go back. But if the line eventually gives way, then price will go. And one thing I need to mention again is, in trading or in the market, price doesn't just move randomly AWire crazy. No matter how price jumps or moves violently or becomes very volatile, prices are always forming patterns. Price does not move without moving in pattern. Why that is, I don't know. I think it's just because it models the behavior of people, the response of people to certain situation, and people just tend to behave the same way. So price is always in pattern. So the better you train your eyes to spot those patterns, the better you can take advantage of them. So if you know I can look at the chart and say, I know price is going to move from point A to point B. And if it doesn't, if it deviates this way, it's going to move from here to here. And if it moves this way, it's going to move from here to here. So you've mapped all the movement. So whatever direction the price turns, you can just begin to ride the trend. And if it changes the trend again, at some point, your chart will become very messy. To a layperson, it is messy. To you, it is you've anticipated every twist and turn that the price is going to go to, so you're ready. So wherever, will price teach you up sometimes? Yes, you will anticipate price to go this way and then it's going to go this way. And hey, it's the part of the trade, it's part of the journey. You take that loss and then you go make your money back in the direction the price is going. But you don't chase price, okay? You don't chase price, you plan ahead of it, okay? And that's why I said I would take time to make sure that you understand technicals, because no matter what, no matter how the fundamentals drive price, no matter how sentimental drives price, no matter what the news, the headlines does, it will always push price, and price is always filling a gap, okay? It's always filling a gap. It is always printing something on the charts that the technical guys will have to then study to see the trend and understand where price is, okay? So in as much as you have to do all your analysis, your technical analysis has to be sound, because in the absence of sentimental, in the absence of fundamental, or all these things being stable and they're not bringing any sudden change in the price movement, price will always, people buying and selling will continue anyway. So price continues to form a pattern. Does that make sense? And that is why in practice, in trading, some people just trade technicals. They don't care about sentimental. Is it a good idea? No. Okay, they would argue to say, look, no matter what other things does, price is always in the pattern anyway. So I will just stick to the study of pattern, and I will just master and perfect my ability to study patterns, and I don't care about anything else. But it has been proven over time that that is not an effective way of trading. It is not. It is better to understand how to analyze the market from all angles, but become very sound using your technical tools to analyze the price actions in the market. Okay, so yeah, I believe we all understand what trend is. Do we all understand what trend is? Everybody understand trend? Yes. Okay, what is a trend? Tell me what a trend is. Give me 1 second, guys. Tell me what a trend is. Okay. What's a trend, guys? Mohammed, okay, it is direction in which price moves, e.g. upwards or downwards. That's it. Um, it's a line drawn to trace the ups and downs. That's it. So yeah, that's what a trend is, as simple as that. Okay, and trend can either be upwards or downwards. Okay, so what if the trend is kind of on a straight line? Okay, if it's up, it's uptrend. If it's down, it's downtrend. So what if it's on a straight line? Like price is bouncing up and down, up and down, up and down, but it's not bouncing up and down, up, and it's not bouncing up and down, down. It's just bouncing up and down on the straight line. Like it's not going either up or down. That's right, it's a range. That's a range. Okay. So we would say price is ranging. Okay. So most of the time, range happens. Okay. There's something called consolidation in price. Okay. So let's say price has been rising and rising, rising. It's gotten to a level. It doesn't have enough information or justification to go higher. And things hasn't really changed for the worse to make price fall lower. So for the time being, price will just be at between a particular range. Okay. We call that consolidation. Okay. And price will consolidate in a range. Okay. So price may be bouncing. For example, say the price of crude oil was rising. Okay, let's say the price took off from like $40 per barrel, and it's rising, and now it's reached $60 per barrel. Okay, and at the moment there's nothing signifying that price of crude oil should rise above that. Okay, and then the market is strong as well. Okay, so it's not going to fall back to where it's coming from. So let's say it falls back down to like $58 per barrel. And then price begin to move up and down between 58, 59, 60, back to 58, back to 59, back to 58, up to 60. So when price bouncing, we'll say the top of the range is 60, the bottom of that range is 58, and between them, price is just doing whatever it's doing. So that's a consolidation, and price is consolidated in a range. Does that make sense? Does that make sense? Okay, great. Let me look at another keyword. Oh, we understand what highs and lows are. And I showed you in an uptrend, price will be forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And in the opposite side, price will be forming lower highs and lower lows. Okay? And how do you know if a trend is about to break? When the trend of higher highs and higher lows begin to change back to you. So if you were having higher high and higher low, I mean price is going up. And all of a sudden, if the new low takes off the previous high, or if the new low takes off the previous low, that means the trend has changed. Okay? Again, these things you will begin to understand them more as we trade. And when we get to technical indicators as well, and we start talking about moving average, exponential moving average, we're talking about the MACD, all of those things, Fibonacci extension, Fibonacci retrace. These are technical indicators that helps you to make more informed decision about trading. So we're going to get to all of those things. Like I said again, at different times during the course, I will introduce certain things that I feel will be beneficial to you at that level. So let's look at charts, okay? Let's not talk too much this morning. Let's look at charts. I'm going to open my, so I'm going to show you two websites that you can add to your arsenal for now for your fundamentals, okay? So the first is, one of them is FX Empire, okay? So if you want to write them down, one of them is FX Empire. And I'm just going to show you how to do like a simple analysis. No, like how to check for information on those websites. I mean, Google is your best friend. So for example, let me give you an example of a typical analysis. Okay, say I want to analyze crude oil. Okay, can everyone see my screen though? Please let me know you can see my screen. Okay, so we're going to be talking more like traders now, not like, yeah, okay, see my screen. Okay, so for example, this is FX Empire, okay? All of you know how to use Google, come on now. But I'm just going to show you how a trader sees. And again, at some point, we're going to get to psychology of trading as well, how to think as a trader. Because you cannot think as a lay person, as a normal person, as a trader. Once you open your charts, you pocket your everyday thinking, okay? And then once you get off the market, then you can think however you like to think. Okay? And I think trading will influence how you make judgments generally anyways. So let's say I want to analyze crude oil. So what I would do is I can just go on Google and just type something like oil forecast, okay? Again, keywords like this, a normal person may not think about it, but because it's taking me time, so I can just say oil forecast, okay? And it will show me like top stories, like this was 17 hours ago, so that means this was what happened on Friday. Crude oil pullback to the week. Okay, so let's open this one. Can you see the top websites that came up as soon as I typed oil forecast? The top websites that came up are FX Empire. Okay, so that means me choosing FX Empire as my go-to place to have a look at certain things simply means that it's one of the top ones. Okay, you can see FX Empire, FX Street, Daily FX. These are good websites too, but I only use FX Empire, mostly FX Empire and investing.com. Investing.com is like my top one, okay? It's like because I trade on my phone a lot. So yeah, and even in investing.com, most of their content is from FX Empire. Okay, you'd see when you click on it, it then takes you back to FX Empire. So yeah, these are my two go-to. So for example, if I click on this now, yeah, it's gonna take me to FX Empire. Yeah, and this guy is one of their analysts. Okay, there's a couple of them, but yeah, their pictures are always there, so I kind of like know their face now. So yeah, so he's talking about the fact that crude oil made its highest move and then pulled back. Okay, crude oil price forecast, crude oil market pulled back to in the week. Okay, this means that it pulled back to in the week range. Okay, that means it made a new high. It made a new high, but as soon as price got to that new high, the sellers came in and they sold it back down. So it came to the price that it was in the week. So all this in the money in the week, they are trading terms that you would understand more as time goes on. The more you read trading articles and news, the more you get familiar with how they word or what they mean by certain statements. Okay, so let's just look at it together. Okay, let's look like a trader. Let's assume that we're doing analysis. So I don't want to assume that you know what to do. Okay, so let's just look at it. So the crude oil market broke down a little bit during the end of the week. Okay, as Friday was slightly negative. It started positive, but it became negative. And that being said, though, it was a very bullish week. Okay, so truly, the week was bullish. Why? Let's look at it. Okay, so this is the crude oil chart. Okay, let's look at it daily. Or let's look at it weekly, actually. Since it says the week was bullish, let's look at that. Let's look at last week, this week that we just finished, and see what the week looks like. Okay, so this is the week. You see the week looks so slim, you almost cannot even see the candle, but it's a bullish week, okay? Because what that means is, this is the previous week. Let me narrow it down a little bit. Can everyone see my screen? Can you see the week? Yeah? Remember why I called this kind of candle, okay? I called them indecision candle, isn't it? It's a doji candle, like that. But this one is not fully doji because it's not black, it's still gray, okay? But you will see some candles. Remember when I was talking about indecision candles? So for example, like this, yeah, if you see this kind of candle, we call it indecision candle. It simply means people didn't know whether to sell more or to buy more. They were selling because this week was a very, very bullish week. Remember, if we break this chart down to daily chart, this big red bar you see will then become like many or 5 red candles that just kept on going down. Okay, that's what it means, or that's what this will break down to. Okay, but we're having a weekly overview of crude oil price. Okay, so this particular series of weeks, like 1, 2, 3, 4, 5, 6. Okay, price just moved down, and then the next couple of weeks he moved up. Next couple of weeks he moved down, and now he's on his way up. Okay, so in the last few weeks, price of crude oil has been rising, but you can see in this last week that we just finished now, you can see what I told you about higher high and higher low. Okay, so higher high, higher low, because the low of this candle is higher than the low of this candle, and the low of this candle higher than the low of this candle, the low of this candle higher than the low of this candle. So as long as price is making higher lows, price is climbing. Okay, and of course, as it's making higher lows, it's going to be making higher highs. Okay, because it's rising. But if you see here, what I was explaining the last time, that when you want to know trend is about to change, you see now, according to this trend, you would expect that the lowest price will come in this just concluded week should be around here, at least somewhere higher than this previous low. But you see, this low of this last week took out this week, okay, and obviously it couldn't take out this week, but it's broken these two lows, okay, so we can say price is about to turn. I can tell you that for free. The price is about to turn. However, it may not turn straight away. We may still see maybe a little bit of consolidation here. Okay, you know what consolidation is now. We may see a little bit of consolidation here, but if price turns around, I won't be shocked because already this has given like a warning shot. Like, hey guys, pay attention, because the series of high climbing weeks consistently, just price just keeps going up. This just give a warning light. Like, hey guys, the trend is about to break. Let me give you an example of that again. Look at this. Look at this climb over here. Can everyone see my chart? Everyone see my mouse? Look at this climb over here. Low, higher low. Yeah, the difference is not much, but we don't, in trading, you don't really care about if it's much. It's just that, does it end up higher? Yes. Okay, so this is low, higher low, higher low, higher low, and then boom. Well, this is a warning shot. You can see this low took out this low. Okay, the following week corrected itself, but look, it wasn't long before it triggered a sell-off. Okay, the sell-off is a combination of two things. Eventually, the price that was climbing got to a resistance. Okay, this sloping line that you see, obviously I've zoomed so you can't see like the trend, but it's a resistance. Okay, price got to a resistance, plus this low has already gotten people, people already, the fact that this happened, okay, is the fact that some people have already seen that price is getting close. In trading, some people are brave enough to let price get to its destination before taking profit. Some people wouldn't. They'll just feel, you know what, I've made enough money. I started from here. I've made a lot of money up to here. So yeah, it's fine. I'll take my profit. Like, look at the high of this candle. If this was the destination, the price was already here. So some people will already feel this is a successful trade. It's fine. I'll take my profit. And remember, I told you, if a lot of people riding a trend take their profit, it means close the trade. It will generate a signal in the opposite direction. So if a lot of people were selling here, selling, and see this line right here, this is a support, right? How do I know? Simple. Look, price go here, pulled back. Go here again, pulled back. And price is approaching here again, what would you expect? Price is going to pull back because this support at least has sent price back at least twice. Yeah, 1, 2, and then number 3. Wasn't surprised, isn't it? So as soon as price is approaching there now, people will take their profit, expecting what happened here and what happened here to repeat itself again. Okay. Is it 100% that this line is going to be up this way? No. Okay, it's not 100%, but I would say 90%. Yeah. Even if the line is going to break, most of the time when price gets there, price will pull back, test it again, then maybe the line gives away, then boom, price will go. Okay, so price got here now, and then all the people that were selling this particular trend, they must have taken their profit. And as soon as they take their profit, or that already starts generating buy signal. It already shows, because think about it. Some people were waiting to buy the pullback. Okay, just like price was coming here, some people were waiting to buy this rally. Price was coming down here, some people waited to buy this rally. So as price was coming down, some people were waiting to buy this rally, and some of the people waiting are actually the people selling this, waiting for price to get here so that they can take their profit and reverse and take their position out of the trade. So as soon as people start taking profit here already, because the sellers are exiting the market, so the price begins to reverse. So get my point. Massive exit from a particular trend generates the reversal. It starts the reversal. And then, of course, the people who wants to trade that opposite trend just jumps on that wagon and rides it. Okay, so going back to the analysis that I was doing, it showed that last week the price made a new high. Okay, so as you can see, this was the high of the previous week. Almost didn't have a week at the top, and then this week came. So price made a new high. Okay, so in the series of weeks coming, 1, 2, 3, 4, 5, 6, 7. Okay, so in the last 7 weeks, price of crude oil has been rising, and in the last week, which just concluded, which is this particular very, very thin candle, price actually made a new high, but it fell back down within the week. Okay, that's what it meant by that statement that I read. So as soon as price got here, I will show you that it hit a support, a resistance. Sorry. So if I break this down to daily chart now, it hit a support. It hit a resistance. Sorry. So can everyone see my chart properly? Can you all see my chart properly? I want you guys to respond to me. I don't want to assume that you're hearing what I'm saying. Yeah, so just respond using the chat. Tell me you can see my chart. Yeah, cool. So if you see, so you can see the uptrend, okay, of the 7 weeks. Okay, this is the uptrend of those 7 weeks that I just showed you. I've broken it down into days now, so obviously it's broken down into multiple days. But you can see the range is between is an uptrend. This is the support, and that is the resistance at the top. Okay, obviously there's more lines in between because there are more support and resistance in between. If I change it to smaller time frames, okay. For example, if you look at this top consolidation of this rising trend, you can see if I change to smaller time frame, you will see like a big trend, uptrend there. Yeah. But the overall range, this is the bottom of the range, and that's the top of the range. Okay, so let me not use the word range because it's not sideways. This is the top of the trend. This is the bottom of the trend. Okay, and then price is bouncing in between. Okay, and this last rally. Okay, this is the daily chart. Okay, so that means this happened on Wednesday, Thursday, okay, and this is Friday. Okay, so Wednesday and Thursday, price saw a rally. Then Monday, Tuesday, Wednesday, price saw a fallout. Okay, so this was Monday, not much because price was at the resistance. Okay, and then Wednesday, Tuesday and Wednesday, yeah, Tuesday and Wednesday, price fell. So Monday, Tuesday, Wednesday, price fell, moved from the resistance to the support. Okay, and then no, Tuesday, no, this is Sunday, sorry, this tiny candle is Sunday, okay, this tiny candle is Sunday, so this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, that was last week, okay, that was last week. So that thin candle that you saw was last week, and the reason why it looked thin was, look, the market opened on Sunday at this level, okay, remember, price always, let me make the candle bigger a little bit so that you can see properly. Okay, so this was Sunday. Price, remember every red candle, the price opened at the top of the body, closed at the bottom of the body. Okay, so price opened here on Sunday, yeah, and price closed here on Friday. Remember, this is the top of the body where price opened on Friday, went this high, came this low, and closed here. Okay, look at where price opened at the top of the body on Sunday, and look at where price closed. You can see that it's almost on the same line. Like price closed almost exactly where it opened on Sunday. That is why on the weekly chart, the candle looks thin, almost has no body. Can you see that? Remember I explained this to you on, was it on Wednesday or last week, Saturday? When I said these candles, the indecision candles are candles where price opened exactly where it closed. Price closed exactly where it opened. It may have traveled. It doesn't matter how long the wick is, candle wick is the body, this king rock, okay? It doesn't matter how low it traveled in the session or how high it traveled in the session. Once price comes back to exactly where it opened, it simply means at the end of the day, could you repeat what highs and lows are? Highs and lows, as it implies, is highs means the highest point that price got to in a session, and lows simply means the lowest point that price got to in a session. So in this particular rally, or let me use this. This looks a little bit more. Yeah, I'll show you. Yeah, so look at these three candles here. Yeah, so in this candle, this is the high. That's the low. Yeah, and then the next candle, this is a high, but this high is lower than this high. Okay, and this is low, and this low is lower than this low. Yeah, and look at the next candle. This is the high. The high is lower than this middle one, and then the low is lower than this. So this is continuous lower highs. Okay, so this is a high, lower high, lower high. Yeah, low, lower low, lower low. Okay, so every time you have lower highs and lower lows and lower highs and lower lows, that's a downtrend. And in the opposite direction, it's the same thing as well. If you want to see a high trend, you will see higher highs and higher lows and higher highs. Yeah, same as here. Look, low, higher low, higher low, higher low, higher low, higher low, higher low until it broke here. Okay, and I said the fact that it broke here is a signal that price may be about to reverse. Okay, and why do I know, or why do I have a feeling that price is definitely probably about to reverse? I've got another indication, the trend line, okay? On the trend line, price just hit the support and hit the resistance. So why do I keep saying support this morning? Price just hit the resistance, okay? If price hits the resistance, what do you expect to happen? Price is going to come back down to the support because price is in the trend, okay? Yeah, this is the high, this is the rally of the trend. This is the plunge of the trend. New high, okay? This high is higher than this high, and this is the first low. Higher low, higher low, higher low. Yeah, higher high, higher high, higher low. Yeah, and then price didn't come down straight away. We tested again. Can you see what I was saying? Because look at what has happened in the past. Test the high, low, test the high, low, test the high. It's supposed to come back to low here. Tested the high one more time. Yeah, and then eventually came low. And then went up straight to test the high. Okay? And what do you expect will happen? Price will begin to pull back and price will begin to come down here. Okay, so I have double confirmation that price is coming down. Okay, and what did I do? I took 2 trades. Okay, I took 2 trades on Friday, and my 2 trades are already at £72 profit now. Where am I expecting them to get to eventually? Okay, so I put my take profit at halfway. Okay, at the halfway journey, because if you see, like I said, at the top of the channel, at the top of this big channel, okay, the top of the channel is here, the bottom of the channel is here, but around the top half of the channel, there's a little bit of a range here, there's a little bit of a trend here as well, okay, and when price breaks it down, then price comes to the bottom of the channel, okay, but in recent times, there was a little bit of consolidation up here before it broke, and price came up here, so there's tendency that price may consolidate a little bit again before it breaks all the way down, or it could just come all the way. Okay, so initially I set my take profit at come all the way, but then I thought about it again. Look, what if price does this? Okay, look at when price moved from the bottom to the top here. You expect price to come straight down, but it didn't come straight down. It stayed a little bit up here for a couple of days before this eventually happened between Sunday to Tuesday, Sunday, Monday, Tuesday, and then price returned back violently on Wednesday and Thursday, and Friday was. It hit the target on Friday and began to turn around. So I took the trade for price to come back down. But okay, it's wise to take my profit halfway, see how price behaves at the halfway line. If I see that price is strong enough, coming down to complete its range, then I'll get back into the trade and then I'll do the other. I'll jump on the other half. If not, I'll just follow the trend. Okay, you always want to follow the trend. And when I took the trade on Friday, as of Friday, price was already at £72 profit for me. You can see I took 2. Okay, I took the first one. The first one was a little. Okay, I took a little out of because price just got there. Price could break here and continue going up. Okay, so I entered with a little 0.35 position. And as soon as price began to pull back and I saw that the reversal had happened, then I added more and I added more position. Okay, this one full position cost me about £500. And then this top one, you can do the math, 0.35% of £500. I think it's about 200 and something pounds thereabout. So all these 2 positions cost me about £700 thereabout. I think upwards of £700. Oh, look, okay. Margin. Remember, your margin is how much you have in a trade. Okay. So these 2 trades cost me £781. Okay. And at the moment, it had £72 profit. If you go get to the halfway line, and you can see that it does it within a day. It does it within a day. So you can even take 2 trades in 2 days, or 2 trades in 1 day, depending on how strong the day is. At the moment, crude oil is very volatile. So yeah, I'm sure. Look, it almost done half of the journey. It became this low on Friday already. So I was in a lot of profit. I was in close to £150, and then it pulled back. Okay, but hey, it's gonna continue on Monday, I'm sure, from Sunday. So if they get to their destination, okay, one of them, the small one, should return about £137, and the big one should return about how much? Let's see. How much? Okay, the big one, £137. And the small one, how much? £55. So just about £200. And of course, if it goes all the way, it's going to be like about £500. And then I'm going to obviously trade it back. Okay? And that should be another £600, £700 thereabouts. So yeah, that's how to take trades. And this is just my crude oil trade account. This is just my true crude oil trade portfolio, basically. Um, so yeah, so this is how support and resistance work. As soon as price, so I didn't trade this, okay? I didn't trade these 2 days. I was busy focusing on other portfolios that I was actively in. So I just came back to check my crude oil and I saw price was approaching this. So I already started watching it. As soon as price gets there, I'm gonna take my trade, okay? And you can actually set a reminder, okay? You can see on here alert. You can set an alert, and you can pull on the alert price level, okay? Okay, and you can put it on there. So for example, I can say price closed at 5792 on Friday. I can say once price gets to 5790, remind me to sell, okay? So I can set an alert saying 5790, yeah, remind me to sell, or yeah, remind me to sell. So if I set this alert, yeah, boom, the alert is set now, yeah. So as soon as that condition shows up, or as soon as that condition is reached, I will get an alert on my phone, just like I get text messages or whatever. It's gonna notify me, and then I'll go put in my trade. Okay, so these are some of the tools that are available on IG as well, which is really, really nice. So you can say, oh, maybe price is down here. You're expecting price to get up there because you want to then sell. Okay, sometimes price may get there earlier than you anticipate. Okay, so what you could do is you can set an alert and you will know when to jump in. Are you using the computer version of IG? I use both. I'm using the computer version of IG to teach you guys now, but I hardly trade on the computer version of IG because I'm not always sitting down here all the time. I've got like a billion and one things to do. So yeah, so it's the same thing. My phone, I use the IG on my phone. But yeah, it's the same account anyway. So whatever is happening, I'll see it both ways. Okay, so are we having an understanding? So that's basically how you trade. So let me go back to the FX Empire and complete what I was trying to explain to you guys. Okay, yeah, it's just here. Just give me a second. Okay, so we're looking at this. So this, I just have to show you the meaning of what this means on the chart. Okay, so the week started bullish. That's the point that I made, that it actually hit a new high on Friday, but it pulled back. Okay, let me see, someone just sent something in the chat. Are you using the, okay, I think I've seen this message already. Okay, cool. So, we have formed a bullish candlestick. Okay, so they consider that doji, that indecision candle, to still be a bullish candlestick, whatever, man. I don't think so. Again, in the beginning, you see the reason why you need to learn to trade. I mean, this person, whoever the editor of this website is, which I think is this guy, this is his own analysis that he's put on here, because obviously he's one of the analysts of FX Empire. Okay, that is his own opinion. It's okay to read it. Okay, so that is his own sentiment now. So if he has people who trust his judgment and stuff, they will just read whatever he says and go do whatever he tells them to do. Okay, but he's not my own mentor. Okay, so he's not my mentor. But I'm not gonna ignore what he has to say because he's not my colleague. He's a fellow trader. Let me say it that way. Okay, so I don't have a problem listening to what other people are saying. There's safety in numbers. Okay, so I would look at it, but you cannot not have your own mind. Does that make sense? You have to have your own mind, and you have to believe in yourself that you understand. I mean, it starts by understanding what's going on, and then being able to, put your mouth where your money is, or put your money where your mouth is, whichever one is right. So let's just look at it briefly. Don't worry about the jargons, but you understand. So the West Texas Intermediate, yeah, that's crude oil, yeah, pulled back slightly during the Friday session as we continue to see the 60 level offer a bit of resistance. Okay, so if we look at where price was, price is at 57.92, close to 59 on The high of Friday was close to 58.71 thereabout. Okay, and you see 59 is just right at the top of it, and 60 is right there. Okay, so we know that this trend is rising up, bam, 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 trying to see if we can approach 60 before the end of the year. I don't think that's gonna happen. I don't know. I'm just saying, I'm predicting that that's not gonna happen. However, OPEC is meeting December, so whatever the outcome of their meeting is, will decide if price is gonna see a new, a run for 60, or if it's gonna just crash. I for one think it's gonna crash, but yeah, don't take my word for it for now. So the 60 level is offering a bit of resistance. That means every time price goes high, price tends to pull back. That being said, the weekly candle is a bit of a hammer. Okay, so it's a nobody hammer. They call it. They think it's a nobody hammer, but I think it's an indecision candle, and it does suggest that there's a lot of bullish pressure underneath. With that being the case, I suspect that if we can break above the 60 level, WTI is looking towards the next resistance above, which is 62.50. Did you see that? When I told you price is always in a pattern, price is always, so people have drawn their lines and they've already seen that once price goes above 60, the next level way to experience a resistance is 62.50. So people are already watching it. So for example, imagine someone takes a trade when price is running up to go and approach 60, and if the price gets to 60 and breaks 60 and it's going up, the person already knows where to take their profit. They already know, I'm going to take my profit at 62.50. They probably already even set it. When price gets, they'll probably set like 52.45. Okay, you're not going to do 62.50 on the dot. They'll do like 62.45. Take my profit there, because I already know that there's a resistance at 62.50, and because it's a new high, once price gets there, people are going to sell it back down again. Okay, so that is how to, so we don't just set our take profit randomly. No, we set it based on price patterns. If price is moving in a direction, you need to want to know where it's going to get to, okay? Where the pullback will happen. You already know what pullback means now. It means reversal, okay? It could be a complete reversal. It could be a temporary reversal to go and retest it, whatever. So pullback at this point will be a buying opportunity. You see that? Because when price gets to 62.50, if it pulls back, it's going to be pulling back to 60, okay? Because 60 was the resistance that it broke. Remember, when price breaks a resistance, if it's coming back down, that resistance then becomes a support, because it's a price point. It's a price point where people pay attention to what's happening. And any trades leading to that price point, people tend to first of all stop, take their profit, and then see what happens from there to decide if price is going to go back or if it's going to keep going forward, okay? So, in other words, if a price point becomes a resistance when price is going up, if price breaks that price point and goes higher, if price is coming back down, that price point that was previously a resistance then becomes a support, okay? Because of the direction that it falls. Okay, remember, resistance is always at the top, support is always at the bottom. So, in other words, what I'm trying to say is this thing that I'm reading right here, this is someone's analysis. Okay, this is someone's analysis of crude oil market. So I can come on here. Again, you can choose any market and you can read what these analysts have to say. This WTI is the US crude oil, and this Brent is the UK, and this is the world version. You can say it that way. This is the world version. This is the US market crude oil. And you see the guy will even put his own video there, and, talk over it, blah, 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 blah. So yeah, so that's someone's analysis about crude oil as of Friday. Okay, and there's more guys who do the analysis. So you can look at what individual of them have to say, and of course you can change this to gold and whatever. But that's just basically a simple analysis. If I go on investing.com now and go on markets, commodities, energies, okay, on the energy, yeah, then I will see WTI there, crude oil, crude oil, yeah. This was where price closed on Friday. This is the chart. I can change it to candlesticks. Okay, there are different charts actually. There are line charts. I only just went straight to candlesticks because that's the most popular one. I don't think people really use line charts anymore. But hey, this is what line charts look like. Imagine you're trading with this. This gives you not much information. Okay, the candlesticks does a better job. Okay, so this is the same chart. You can see this is the details. It shows you the previous close. the previous open, the day range. Okay, the day range price moved between 57.51 and 58.74. That's the high. That's the low of the day. That's the high of the day, and that forms the day range. Okay, shows you the week's range. Yeah, show you the 1 year change. So yeah, all the informations are there. Yeah, and then you see the crude oil news there. So you see, news has been provided. So this website just compacts everything that you need. Okay, puts the news there, puts the analysis there, future analysis. So you can have a look at it. You can have a play around with these things, and then it shows you the technical summary. Okay, based on all of these things, what does that mean to you? They've told you the analysis. So they're saying that on the 5 minutes, yeah, moving average, these are indicators, okay? These are technical, these are, yeah. On a 5 minutes, it's saying buy. If you're using moving average, if you're taking your decision using moving average, it says buy. The technical indicator says sell, okay? On the 15 minutes, it's a sell and a neutral and a neutral. On an hourly, it's a buy, strong sell, neutral. On a daily, is a buy, buy, buy. On a monthly, is a neutral, neutral, neutral. Okay, so on a monthly, it simply means price is going to be in a range. It's not going to make a new high, it's not going to make a new low, it's just going to be around the same area. Daily is saying that on a daily right now, price is still going up. So this is their own summary, okay, as at Friday, okay? And it was correct because as at Friday, price made a new high and then began to turn around, okay? And I began to sell the turnaround, okay? And moving into this next week, we would see how it goes. I will show you guys how it goes. If it goes down or if it turns back around and wants to make a new high. But yeah, but I'm not going to take £0 from that trade. I'm going to make profit from it. That much I can tell you. So do you all, let me look at a gold chart. Let me help you guys a little bit. So all you then need to do is take a trade. Okay, so if we look at the gold chart, let's look at, remember I said use weekly to see, obviously there's bare lines on my own, so, but don't be confused by it, it's fine. So if you look on my own lines, this was a trend, okay? Price was above it, came below it, then formed this trend, yeah? And then eventually this trend broke to the low, to the downside. And even though it broke to the downside, it still followed a particular, yeah? If you see, if I zoom really, really out, the candles become very, very small, but you can see that price 1, 2, 3. So this is the super support. Okay, this is a super support right down here. And this is a super resistance at the top here. Okay, so you can see the range in recent times. And this formed between 2015. So forget about what's happened in the past there. We don't need it for now. Okay, let's look at from 2015, this range, this uptrend started forming, sorry. Okay, this uptrend started forming. This is the bottom of it, price has tested it twice. This is the top of it, price has tested it 3 times. Yeah, right at the beginning of 2015. Yeah, at some point in 2016. And of course, price made a long time high this year. Okay, this is the high of this year, 2019. And when last the price climbed this high? 2015. Okay, so this is like almost 4 years high this year. Gold really made a rally because of the trade war that affected the dollar negatively. Remember, gold always trades in the opposite direction of the dollar. So this rally in gold is as a result of the problem that dollar faced. But recently, dollar started getting high. Another thing I want you to notice, a revolution is about to happen because gold and dollar never moves in the same direction. This year, after a very long time, it happened. They moved in the same direction. It means dollar was getting strong whilst gold was getting strong too. Something is about to happen. I'm not going to talk about that now because you won't really understand it, but yeah, we'll talk about it before the end of the course. But as far as this trend is concerned, what do you think is happening now? Price has gotten to the high, acted like broke it, but I won't call this a break because price came straight down into the range, okay? So in the long term, price will be coming down here, okay? Price will be coming down here, but in the meantime, it may not come down straight away, okay? It may go back up again to test this resistance one more time, or if it doesn't, you can see that as soon as price got to this level, it consolidated. Why? Because of this in-between range, okay? The top range is, the top of the chart is up here and down here, but in the middle, you can see that price formed another range, okay? Eventually broke to the low. So right now, as soon as price came back down here, what used to be a resistance here has now become a support here, and the price respected, yes. Before price broke to the upside, price respected it for a while, tested it, look, multiple tests, the line eventually gave way here, price made a new high. And then on the way down, when price got there, look, consolidation is happening. Price is respecting that previous resistance that has now become a support. If the line holds, then it's going to send price up to go test this main resistance again. And if this main resistance holds, price will just keep bouncing there until if this line gives way, then price comes between this range. So you already know that if price breaks this line, price is coming down to the support, yeah, which has been a support from here. So this is how to anticipate price movement. So I already mapped out where gold is going. It's not running anywhere haywire. I already have it figured out. So you must get to a place where you're like this. You already have it figured out. You know where it's going. So if it goes this direction, you know where it's gonna stop. If it goes this direction, you know where it's going. So if it breaks into this range, I know that price is coming down here. And when it comes down here, it's probably going to bounce here. Or it could just come down here, go and get to this line, test it like once or twice, break it, come to this downside, depending on what's driving the price. Okay? If suddenly dollar becomes extremely strong and it's just going high, then price is going to come down straight. Okay? And if it's a little bit of bounce here and there, price could bounce between here, break it to the upside, go test it again. If gold is strong, if not, it's going to come down. The strongest time of gold are always in the summer, because it's the festive period. So yeah, we'll see what happens this summer. That is this summer next year. But hey, gold has a long way to go if it decides to come down. So this is a long trade to take. Okay, a lot of money to be made from here. But hey, I won't commit to a long-term sell of gold yet, because gold is still fighting to go retest this top. So what does that mean here? If one wants to buy gold, this is a very good time to buy, okay, because it's hit a support. Okay, this previous resistance now has become a support. So this is a good time to buy. But hey, you're not just going to buy because price had a support. You're going to buy because there is support, and it's the fundamental supporting that gold is going to be strong. What are other traders saying? What is the net position on people that are buying gold? Because those things you need to factor in. You need to check the hedge funds, the guys, the banks with the big money. Are they betting on gold going up now? Are they betting on it going down? Those are the things you want to pay attention to. So, so let me just narrow it down to small time frame now and tell you guys what, if I were you, what I would be doing. So let's look at daily. So on a daily chart, you can see that I already have a trend as well. Yeah, this is my trend on a daily. Okay. Boom, 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 boom. Yeah. So on a daily, price is still going up. Okay. Price has got this much climb to do, because look, it hit the bottom here. This is the test of this bottom that is strong. Tested once, tested twice, tested 3 times, tested 4 times. This is strong support, right? The resistance is strong as well. Tested once, 2, 3 times. This is not a break. 4, yeah. The 5th one didn't get there, was fine. 5, 6, yeah, yeah. So the support is strong, the resistance is strong. Until something violent happens to make this break to the upside or break to the downside, I want to believe that price will begin to bounce. And right now, the price is moving, is on the journey from down to up. Okay, so if I was going to be trading this, I'm going to be buying. Okay, I'm going to buy in any long in the short term. Okay, on a daily chart, and this is going to take a couple of days. So that means there's a lot of money here, a lot of money here. In the middle of a range is the most difficult place to trade, because price could go either way. It could decide to go up, it could decide to turn back down and go down. So in the middle, that's why it's always good to catch a trend right at the start. Because if I start buying right here and price is here now, I won't be worried because I'm still in profit. Okay. So even if it comes down, the worst that can happen is I'll come back to zero. Okay. But if I decide to buy here, expecting price to go up here, price could decide to go down. If I decide to sell, thinking, oh, he's turning around, he's not going to make his way up, look at how he's turning around, price could then turn around again and go up. Okay, so it's always good to catch a trend at the beginning. Okay, so that no matter what happens in the middle, you're fine. It's just a matter of when the price will get to the destination. And if you feel price is not going to make it and price is going to turn around, you just lock in your profit. So you may make less profit than you initially set out to make, but at least you make profit. So support and resistance is very, very key. Okay, but you say I miss entering at the start of a trend, I always want to enter every time price dips. Okay, every time it forms another low. Okay, so this was a previous low, made a high. Yeah, this is another new low, made a high. This is another new low. Okay, and it's on an uptrend. Why? This is a low, higher low, the low of last week is still higher low because it's still higher than this. Okay, so if I wanted to buy, I would buy here. Okay, and of course you can narrow it down to like maybe hourly or 5 minutes to see exactly when to jump into the trade. But hey, yeah, so yeah, gold is a buy for me. If I was trading gold, I would buy, expecting price to come up here, especially because the trade tension is getting stronger. There's not much of good news coming, so the dollar may still be weak for a little bit, which will give gold an opportunity to climb a bit higher to contest. And 1500 is a psychological price point for gold. Above 1500, gold is believed to be strong. Below it is considered to be weak. So I would expect gold to still make a run for 1500 in the near time. So that's my analysis for gold price. Again, it is what it is. So have you learned something more? Was this something new? I believe there is no way to draw different types of trend lines, like for strong support, thicker line, or there may be, there probably is. Yeah, Ivana said there is. Ivana has been doing a madness with this she shows me trend lines like every 5 minutes, like every 5 minutes. So she's really, and I expect you guys to be doing the same. You know, the better you become with these things, the earlier I can look at you and say, you're ready for the live market. It's starting to stick together now. Yeah, it's beginning to make sense now. Yeah. So like I said, we're gonna spend the rest of the course on trades and technicals and analysis and combining it with tools. And then the more we do it, you just understand more. The time just comes, everything just makes sense to you. Okay. And then at that point, the trader in you then comes out. Your character, your temperament then decides the kind of trader you become. Okay. From that point on, all you will then need is mentorship. Okay, you already know what trading is. You already know how to trade. You already know what to look out for. You then need mentorship to model the kind of trader that you would be. Okay, if you're an aggressive person, you will just be doing aggressive trades, and that could hurt you. Okay, and if you're someone that is just too slow, you will not make decisive decisions. So you're gonna need to be mentored into trade. So yeah, put your analysis in a group. Don't be scared of if it's going to be right or wrong. That's why this is a class. This is a school. So I don't expect you to get it right. I want you to make mistakes so I can correct them. If you don't make mistakes, I want to know what to correct. Okay? So take trades, make mistakes. Make sure that your account is set to spread bet. Take the minimum size possible. Because what will happen is, because it's demo, the money is just there, you get used to making certain amount of money. And when you start your live account, you want to do the same thing. You will take unnecessary risks. You may say, oh, no, I won't do that. Trust me, I've heard people say that. People always do it. Okay? So start with the bare minimum, trade with the bare minimum so that you become realistic. Okay? Because when you're going to start your live account, you're not going to start with £1 billion. I don't think any of you will start with £1 billion. You're going to start with something small and then you grow your account. Okay? Slow and steady is good in trading. Okay? And as your confidence grows, then you can take certain risks. There are certain risks that you would need to take as a trader. That's how you make good money. But you have to be trained enough to be able to make not reckless risk, okay, calculated, informed risks. And that's the fun of trading. Will we know what the red line means? What red line are you talking about? What, you mean this one on my chart? Okay. Oh, by the way, you see these wobbly lines that you're seeing, they're called moving average. Okay, but this is not for today. I'll explain it another day. Okay, I'll explain it another day, but this is called moving average. It tells you where the real money is. It filters out the noise and tells you where the real money is. But yeah, that's that for today. Does anybody have any question before we call it there? We will know what the red line means. Yes, the ones on the chart. Yeah, you will know what it means. There is nothing that I do that I will not explain to you in the course of this trading course. So yeah, be rest assured you will know. They're called moving averages. I'll tell you how they work, and it will help aid your trading. So thank you everyone for coming on again today. Like I said, I'm always excited to speak to you guys. I love to trade. I love to teach people how to trade. I just love it. And I'm looking forward to, greater things with you guys. I don't just want to trade you and then say adios. No, I want us to be friends. I want us to create a great trading community. I want us to build. I want us to look forward to making a dent on the future of global finance. Okay. And hey, big things do start small. So don't say, oh, yeah, me, yeah, you. We can do it. Okay, so thank you very much, guys, for coming on again. Don't wait till Wednesday. Okay, do stuff, open different charts, try to analyze, try to do technicals, try to look at support and resistance in different directions. You know, the big ones, the smaller time frame ones. Do it. Send it into in the group chat and let's talk about it. Okay. Yeah, we will be meeting up very, very soon. Okay, Ivana will announce the details in the group chat. Okay, but we will be having a link up very, very soon. It's most likely going to be in Kensington. It's most likely going to be in Holiday Inn in Kensington. It's one of the hotels that we use. So yeah, and then we'll all get to see each other. I will be able to put, you know, faces to the names that I know already, and you will meet every member of the team as well. So yeah, I'm looking forward to it. I'm looking forward to it. Wilford is in Italy, isn't it? Is Wilford in Italy? No. Is Wilford in London? Near the Westfield. Oh, you're in Chingford. No. Kensington is west. Is in the west. Okay, Kensington High Street. The Holiday Inn is in Kensington. Okay, so he's in the west. He's in the west of London. That's where the money is, guys. That's where the money is. So I'll let you guys go now. But hey, the market is closed. It's a good opportunity for you to do analysis because everything is still, nothing is moving. Okay, so you can see it. It's not jumping in your face. So it's a good time to analyze your market ahead of Sunday night. Okay, make it a practice. This is what makes you a diligent trader. Don't wait till the market is open, then you're beginning to try to analyze because price is moving. Okay, now price is not moving. Price is still, except for cryptocurrencies. Okay, cryptocurrencies are open on Saturdays. But apart from that, all these markets, crude oil, the indices, the forex, the commodities, they're closed right now. So this is a good time to analyze. So from the close on Friday, the whole of Saturday, and the whole of Sunday, because market will open 10 p.m. on Sunday. This is a very good time for you to. It's a very good time for you to analyze the market, know what you want to do ahead, so that when the market opens on Sunday night, you can put in your positions. Maybe you don't want to take trade on Sunday night. Maybe you want to wait till Monday morning, you know, when everyone is live and in the market. But at least map your positions ahead, know exactly what you want to do, and then execute your trade when the market opens. That's a good practice. So thank you, everyone that was able to come on the course today. I hope we've made another progress. And I will catch you guys on Wednesday. So I will expect you to have taken trades from Sunday night, some of you, Monday morning, some of you, and trade till Wednesday. Okay? And remember, when you draw your lines, you want to sell at resistance because price has been going up. It's gotten to that place now, it's going to pull back. Okay? And you want to close your trade at support. Okay? Whatever's coming down, when it gets to a support, it's going to turn around and start going up. Okay, so if you had a sell trade, that's going to take your profit. And if you didn't take any trade, that's place to buy. Okay, you sell the resistance, you buy the support. Sell the highs, buy the low. Sell the highs, buy the low. That is a rule of thumb. That is what should be in your head all times. Okay, you want to sell the highs, you want to buy the low. Sell at resistance, buy at support. Okay, if you miss buying at a particular support, when price goes up, when it pulls back down a little bit, that's when to quickly get in. Because remember, it makes higher highs, higher lows, higher highs, higher lows. So if you miss any of the lows, you want to get in at the next low, or at the next low, or at the next low. And if you become a prolific trader, that's going to add more to your position. Okay, so you bought one, once it pulls back, you can add more positions. Okay. When it goes up and comes down, you can add more positions so that eventually when it gets to the destination, you have like 3 or 4 positions that are just accumulating profit. Okay, I'll train you how to do that. Don't start doing that yet. Do not do it. Just take one position at a time, one trade, see it to completion, take in the opposite direction, and just like that, and we'll review it. Thank you very much, guys. If you have any questions, again, feel free to ask them in the group, and I will answer you. Okay, Ivana will try to answer, and if she can't, then I would answer. Okay, so yeah, guys, I'll see you guys on Wednesday. Have a lovely weekend ahead, and yeah, catch you up.